Good morning and welcome to today's morning report. Chart appraisals with me, Rich Perry, market analyst at Hantec Markets on Friday the 30th of June. We have a sort of corrective move that's been seen on to the moves that we've seen in recent days. We've seen euro strengthening, sterling strengthening, and that seems to be turning around. And what we have seen is the dollar sort of taking back some of the losses that it had in recent days. Look at this euro down 40 ticks, sterling also lower. Actually, these moves are sort of beginning to sort of develop as we go on, and the dollar strengthening is sort of pulling gold a little bit lower. Now we've had some really quite significant corrective moves on equity markets in the last couple of days. Sharp move to the downside on Wall Street yesterday. That followed a really significant sell-off on European markets yesterday. Certainly the DAX, which is my chart of the day, got sold off quite sharply. And that sort of is consolidating a touch today, but that consolidation could well just be a bit of a sort of a calm before the next selling pressure, and that's my expectation anyway, as that selling pressure starts to sort of come through. In terms of your dollar, a very mild rebound, but nothing too significant yet that would suggest a sustainable recovery. But you can see here that the dollar has been sold off insignificantly in 2017, and that trend lower continues, and that is despite the fact that we've seen treasury yields which are starting to move higher. You've got the 10-year treasury yield which has spiked higher in recent days, and that basically moved higher. It came in the wake of Draghi's comments about the reflation taking hold in Europe, and it's sort of filtered through into the US markets. Certainly the 10-year treasury yield has spiked higher, and that has helped to steepen the yield curve once more, as the 2-10s spread has widened back to 90 basis points from the 78 point that it was actually earlier on this week. So a really strong move, but the dollar has yet to really sort of significantly react to that, and it'll be interesting to see if that move does get reflected in the dollar as this mild dollar rebound sort of takes hold. So we've got inflation as the sort of main focus today. We've had Japanese inflation out overnight, plus 0.4, but inflation for the Eurozone and probably more importantly, inflation for the US is the sort of a key announcements today. Eurozone inflation is at 10 o'clock, expected to mildly improve on the core, well, 1% on the core, and also the flash headline number is actually expected to come down to 1.2, but we saw yesterday that German inflation came in better than expectations, or higher than expectations. Could that drive an upside surprise possibly on the Eurozone data? But then in the afternoon we've got the core PCE, which is the Fed's preferred inflation data, and that is expected to be 0.1% on the month, which would sort of be a mild drag back to a sort of 1.4% possibly on the year-on-year data. So if that is to be seen, then that again sort of would begin to sort of start to question again the sort of lack of inflation in the US, and it could weigh on the dollar this afternoon. But certainly that will be the focus this afternoon. Now we've got the chart of the day for my analysis, which is the DAX. Now the DAX had a significant bearish engulfing candle yesterday, but look at this decline that we've seen developing in the recent sort of couple of weeks, really, as rallies get sold into at lower levels. And yesterday's move was sort of indicative to that. It broke the old sort of shallow uptrend that had been forming, broke that on Wednesday, and yesterday initially the rebound just got absolutely smashed into late on into the in the session, and has now completed a breakdown of sort of a range trade. Certainly on the futures it looks more like a sort of a top pattern range trade breakdown below that 12,490 level on the cash index, and that sort of completes this top pattern. And certainly I think if we got to move below 12,375, which is another old sort of key breakout level, I think we could see some significant correction sort of developing. You'd sort of point towards 12,490 to 12,950. What's that? 460 ticks of downside, and you could certainly see possibility of a retreat back towards 12 12,000 is perfectly within the realms of possibility here. So it is a move that is developing. Look at the momentum indicators. RSI 36 as we speak. Let me just see how that goes on the. Yeah, I mean that's the lowest since November. So it is looking increasingly corrective, and you'd sort of could easily see a sort of a pullback towards this old primary uptrend. If I go back further, you can see that primary uptrend comes in around about sort of 11,900 at the moment. So a move back towards 12,000 is not beyond the realms of fantasy really within that uptrend. So a corrective move could easily be seen now on this DAX chart. You can see the hourly chart whereby we've sort of broken below that support, which comes in at 12,490. An unwinding move may be back towards the sort of 50 level on the RSI, with the MACD lines increasingly negatively configured. Stochastics arguably beginning to turn up a little bit, so you could see a little bit of a near-term rally, but I think 12,490 is a key overhead supply between 12,490 and that low 12,536. Selling opportunities really, all these rallies now I think on the DAX. I think this is going to turn corrective. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.